I'm attached to your packet. So Janice, if you keep scrolling, you're going to have to go past this report here. That's the report. We'll get to the actual presentation. Yeah, there you go. That's the first slide of the presentation right there. So this was a review of construction management and design contracts and invoices. So if you want to look at slide 2 here. First, I just want to give you a little background on the overall CIRP area. So this audit focuses on a portion of that program. If you look at this slide, you can see there's approximately $1.81 billion in project costs budgeted to the CIRP, which stands for Capital Improvement and Replacement Program. Over the past 5 fiscal years, you can see the dollars and the number of projects that are part of this overall effort. It's quite large. Expenditures and activities in this area are significant. If we go on to slide 3. What are the items that are driving the cost of the district CRP? First of all, the consent decree, which is the focus of that is elimination of sewer overflows and overall improvements to the system. Then you have the ongoing recent regulatory requirements that the district has to comply with. And you have any identified system infrastructure deficiencies requiring intervention or improvement. I would say the first 2 items are probably the bigger cost drivers, but they're all three drive the costs here in the activities. Slide 4. The consent decree between the EPA and the state of Missouri and MSD, MSD was entered with an effective date of April 2012. So it currently calls for approximately $6 billion in system upgrades in 2018 dollars. As a result of the decree requirements, the district did develop and implement what we know as it's a Project Clear initiative. That's the major construction initiative. Slide 5, the work outlined in the consent decree was originally scheduled to take place over 23 years, but the schedule was extended to 28 years by a district judge because of issuance of new regulatory requirements requiring the acceleration of projects outside the scope of the consent decree. As I mentioned in the previous slide, one of the cost drivers is regulatory requirements. So the point I'm really trying to make here is that with no real slowdown in costs and activities in sight, maintaining effective procedures and controls around this whole area is going to remain a very high priority for the district and the internal audit for the next several years. So this engagement is simply one of several audits that touches the overall CRP program. If you look at the bottom half of that slide, you can see a list of some of the audits that we do: construction change order process, individual overhead rates, active construction contracts, project accounting, pay application processes, procurement, diversity, emergency contracts. These all touch the CRP program. On page 6, this slide provides a history of these engagements going back to 2012. If you look down in the bottom left-hand corner, you see the change order audit in FY12. You work your way around the manhole there, and you get to the bottom right-hand corner. You see the CM design contracts audit. That's the audit we're talking about right now. And we're also in the process of planning another construction change order audit right now. So there, at a minimum, there's at least one audit that touches this area every year. In most cases, there's 2 or more in a lot of years. So just want to give you an idea of our overall approach to this area, because it's a very important area. If you move on to page 7. Now, as far as the scope for this particular engagement, it consisted of a review of district construction management design contracts, or what they also call engineering consultant contracts, along with the related billings and invoices. So to clarify a little bit, these contracts do not involve the actual construction. The services on the CM side involve management or administration of the construction project. So they're actually acting as an extension of our people. They're out there managing and monitoring the construction out there, actually involved in invoicing and monitoring the work. Now, on the design side, the services involve the actual design, and also there's also a management portion of some of the contracts where they're actually managing the design project. Now, the scope period for the invoice transactions that we looked at was fiscal 2020, so 7/1/19 through 6/30/20. There are two types of billing mechanisms that we saw in our testing. One is what they call cost plus. That is where the contractor bills an hourly rate for the people working on the project, then they have a markup. It's like a fixed fee. This will be important later when I talk about a recommendation. The second type of billing mechanism is what they call lump sum or percentage completion. That's basically an overall lump sum for the invoice. As they're moving through a task, they get 20%, they can bill 20% of that lump sum as they move along. Any questions? So let's move on to page 8. Now, as to the overall objectives for our engagement, we wanted to ensure the structure of each contract was adequately designed, incorporating provisions that control costs, protect the district. We want to make sure that procedures to review and improve and process invoices were properly designed and implemented. We want to make sure the invoices submitted by the contractors were accurately prepared. We got both types, cost plus and lump sum. We want to make sure they're supported by appropriate documentation, from both sides of the coins, from the contractor and the district. We did identify one issue there, and I'll talk about that a little later. That's our recommendation is about some documentation issues. Pretty minor issue, but that's where we find something. We want to make sure the invoices are prepared using appropriate labor rates. As I mentioned in the cost plus invoices, they actually use an actual hourly rate. So we want to make sure that was in line with the contract. We want to make sure the overhead rates that were used in the cost plus invoices were actually rates that were approved by the district. One of the audits that I mentioned in my list was overhead rates. So we actually, internal audit looks at these rates annually. We check them out, make sure they're prepared properly in accordance with certain guidelines. So we should have been seeing rates in their invoices that we had pre-approved. So we were looking for that. We want to make sure the invoices contain costs that are allowable to produce the contract, and then there are no costs that are already reserved by the district that we're getting billed for. So let's move on to page 9. Now, approaches, as far as approach and methodology, what were our procedures? We did obtain a report detailing the population of consultant contracts for the scope period. From that, we made a selection of contracts or contractors. We did review the contracts for the language and provisions. We obtained a report detailing the disbursement and billing populations. And from that report, we made some selections of billing packets, monthly billing packets for each contractor. Along with that, we did some walkthroughs with district personnel and got a really good understanding of how they review and process these billing packets. And then we reviewed each billing packet by reviewing the supporting documentation. These billing packets are quite extensive in some cases, up to 200 pages. There's a lot of projects under these contracts. We did meet with personnel with any questions that we had. We actually went back to the contractors in some cases to have them explain their billing methodology, make sure we understood what they're doing and got a comfort level and when we needed to. So any questions on that? On page 10, overall, this went really well. Engineering does have some very solid procedures in place around this area. We had a satisfactory opinion. To remind everyone, our three types of opinion are satisfactory, generally satisfactory, unsatisfactory. We did identify one opportunity for improvement. That was in the review and verification of labor rates for subcontractors or cost plus contracts. So as I mentioned earlier, the cost plus billings involve a hourly rate plus a fixed fee. So this issue is centered on the documentation of these rates. So if you move on to the next page, which would be slide 11. So when we were looking at the invoices in the billing packets, what we saw for the subcontractors, in some cases, not all cases, it's just some of them, when they listed their personnel and put a rate, billing rate, some cases there was no title and no position listed with that personnel. So we were not able to tie that personnel rate to the overarching contracts. So it was a documentation issue. I should note that engineering, when they review these packets, the personnel that reviews this package is very well versed in the personnel that's working on the project. They know the project inside out. So they know what they're looking at. They're able to verify, but that documentation is not in the packet. They do prepare a checklist that, says the rates are okay, but personnel such as ourselves or other engineering personnel would not be able to verify their rates by the documentation that's currently contained in the packet. So what we're recommending is that engineering add another schedule in every billing packet with a contract when completed. They would identify the personnel, their title, their position, the capacity they're working on this project, and that way you can take that schedule and tie it to the overarching contract and make sure the rates are in compliance with the contract. And they already have developed a schedule and came up with a really good schedule. So they're going to have that up and rolling by July 1st. They have it in all the billing packets by them. So they came up with a pretty good solution.
Is it something that MSD staff does, or is it something that the contractor is required to?
I think they're going to have the contractor put the schedule together. Yeah. The MSD is going to put the template together, and then we're going to have them fill it out.
Cool.
Yeah. Any other questions? That's all I have, yes. Thanks for your time.
All right. So if there are no further questions, looks like next meeting is scheduled for the end of this month, June 29th. And then Trustee Watson, I guess we'll entertain a motion for adjournment.
So moved. Second.
All right, we are adjourned. And
Push your documents up, Trustee Nicholson, as soon as we're actually ahead of schedule. As soon as we get to 7:45, we'll let you know. We'll be ready to start on the next one.
trustees that are present.
Can I get a motion for approval of minutes?
So move.
Second.
Engineering Department agenda items will be June 10th, 2021 board meeting.
Okay, good morning, trustees. In your packet, I'll be reviewing the Engineering Department agenda items. The first item on that agenda is the Deer Creek OMCI reimbursement program. It with the city of Ladue. This authorizes staff to enter into an intergovernmental agreement with the city of Ladue and the Deer Creek OMCI, Operation Maintenance Construction Improvement Fund. This ordinance authorizes the district to enter into an intergovernmental agreement with the city of Ladue for eligible stormwater expenditures where revenues collected by the Deer Creek OMCI subdistrict. Eligible stormwater expenditures include the following: storm sewer and inlet construction, drainage improvement, stream bank stabilization, and erosion projects. Stormwater planning or engineering costs and other stormwater related expenses as determined appropriate by the district. The agreement with the city of Ladue is performing a project called Robin Hill Mcknight Lane Bank Stabilization Project. The improvement includes 855 lineal feet of storm channel, renovation and bank stabilization and other appurtenances. The estimated cost of their project is $1,750,000, and this agreement provides the district to reimburse those costs to a total of $305,253. Just a little background to this: in January of last year, the district had reinstated the OMCI taxing subdistricts. There's a slide in your packet that says OMCI grant program. It's shown on the screen there. In 2019, when the Proposition S was failed by the voters, we then, after that, went out to outreach to the municipalities that are located within 12 OMCI subdistricts, shown on the map in the red areas, to determine whether they were interested in the district turning these OMCI taxes back on to generate revenue to do stormwater capital improvements in those areas, which was our source of funding prior to 2016. In 6 of those 12, there was an interest from the municipalities to turn those back on. We recommended that to the board, and those were turned back on. As part of turning those back on, one of the items we instituted with that was a grant program. In other words, the monies that are generated within these OMCIs really belong to the folks within those OMCIs and within those municipalities. So those municipalities were kind of anxious for an opportunity to be able to utilize that funding themselves. So what we did is we created a grant program. In other words, 50% of the funds generated within their municipality would be available back to them. We would have to administer that to them. And these are the first 2 grants that we've had requested by that. In other words, they can't request more grant money than we have available to them. So that was outlined previously in that ordinance a year ago. So I felt it was important to put this out there since a lot of you weren't here last year when we went through with that. Also in your packet is a copy of that board write-up from last year. If you want to review that, I'm not going to cover that today. Just going to cover the 2 grants. Before I move to the next grant, are there any questions? All right, the next grant is also there's a picture of the project that I'm describing in there for the Ladue project as well. Next project is the Deer Creek OMCI reimbursement for the city of Glendale. This authorizes staff to enter into intergovernmental agreement with the city of Glendale and the Deer Creek OMCI. This ordinance authorizes staff to enter into the agreement with the city of Glendale for eligible stormwater expenditures where revenue is collected in the Deer Creek OMCI. Again, eligible stormwater expenditures include storm sewer and inlet construction, drainage improvements, stream bank stabilization, erosion projects, stormwater planning and engineering costs, and other stormwater related expenses as deemed appropriate by the district. The city of Glendale is going to be contracting for engineering service to prepare a citywide comprehensive stormwater master plan for the city of Brentwood. Their estimated cost for the project is $178,300, and the agreement provides for a reimbursement up to $66,000, which is the available funding for the city of Glendale. Again, there's a map in there for this particular project. This stormwater master plan probably won't be the first or the last of the master plans, because there's a lot of municipalities out there that they wanted to do this master plan themselves, look at the projects that maybe they could do, and then they also generally turn those master plans back over to the district, and then we can incorporate projects that maybe we don't have in our system for future if we ever do get a stormwater funding rate to allow them to get those projects in. So a lot of the municipalities have them, but a lot of municipalities didn't have the funding to go ahead with that. With the grant program, they've been able to do that. All right.
Excuse me, how many of these grant programs, how many of these grants have we administered or given?
These were the first two.
The first two.
Okay, there is really two programs because some of the funds are pretty small that are available in municipalities, some of the smaller municipalities. So when we went to the board last year, if there was a grant under 50,000, we got blanket approval that staff could approve that and just without bringing it to the board. But if they were asking for more than 50,000, then we were bringing those to the board, and these were the first two. So it's been about a year, kind of what we expected.
So when we get these small, like micro municipalities, sort of in North County, for example, do they even generate enough revenue to meet the match?
There's not a match requirement. That money's available to them. That's 50% of the total we collect. The other 50% we'll spend to do projects that we have identified.
Okay.
So yeah, there are some smaller dollars in your packet. As you can see, it lists all the projects within Deer Creek. I don't have all the OMCIs, but some of the dollars. I think the smallest one here is like $30,000 for Warson Woods.
Right.
If they had a small project it allows them to do a project that may not come up to our priority. In other words, we go to the highest priority projects.
Sure.
And kind of gives them a chance to take care of smaller stormwater projects.
Cool. Thank you.
Mm-hmm. Thanks for your question. All right, the next item is a Deer Creek Sanitary Tunnel Pump Station project. This action appropriates additional This is a planned appropriation in our fiscal year 2022 budget. The work to be done consists of the construction of a pump station at the downstream end of the Deer Creek storage tunnel. It includes the construction of a wet well building, 2 dry wells, a dry well building, an effluent structure, and site improvements. The site improvements include utility, paving, fencing, landscaping, the reconstruction of Carr Lane, which was our access to this construction site, and other associated work. The construction is the second phase of the project. Obviously, the tunnel was the first phase, and it's to address, provide additional storage during wet weather events by allowing surcharge sewers in the Deer Creek to overflow into the proposed tunnel, and it will provide for the elimination of 12 sanitary sewer overflows throughout the Deer Creek watershed. It's part of a Deer Creek trunk projects phase 1 and 2 that are currently under construction as well. So it's a fairly massive project, but obviously eliminates a number of overflows to Deer Creek and puts those into the sanitary system and into the tunnel to allow full treatment for those overflows. The appropriation for this particular project is, the supplemental appropriations for $15,600,000. It will bring the total appropriation for this project to $30,600,000 and fully fund the construction for this project. The construction is going really well. That's why we're here already in June and for fiscal year 22 getting the project. The funding we're requesting today is actually $600,000 more than what was in the fiscal year 22 budget. The reason for that is the site that this pump station is being constructed was utilized by 2 contractors. It was the initial site that SAK used to build the tunnel and launch up towards the Galleria, the Deer Creek Tunnel project, and then they pulled off, and they're almost complete with their project, and then KCI moved on to this same site. So initially, this was all one project, so we had some of the site improvements that I discussed previously, the Carr Street lane improvements and some site work on there. We're actually in the Deer Creek Tunnel project, but we found that it's not really efficient for KCI to finish and SAK to move back onto a site they already vacated. So what we did is we've got a credit for $700,000 from SAK on that contract, and we're adding $600,000 to this contract to get that work completed. So we're basically just allowing KCI to do that site cleanup work as opposed. So contractually, that's why we're over $600,000 over what's in the budget book. Any questions on that?
The SAK piece is basically 700,000 less.
Right. In other words, it's not an additional 600. It's basically they're not going to do it under theirs. We just moved it to this
You
contract.
move the money.
Right. All right, the next item is infrastructure repairs for wastewater projects for the fiscal year. This action appropriates funds for small infrastructure repair projects to be bid through purchasing for the fiscal year 2022. The work to be done consists of repair, replacement, and construction of manholes, sewers, and other infrastructure as identified by operations and engineering department at various locations throughout the district. The work is part of the district's ongoing CMOM program, which is construction, maintenance, operation, maintenance, operation, and maintenance program to complies with the acute defect repair requirements outlined in the consent decree. This appropriation is to continue implementation of the small sewer repair program. As projects are identified, contractors are hired by the rules of the purchasing ordinance, and those repairs are made. The appropriation, this is an annual appropriation for the small repair program. This year's appropriation is $7 million. It's typically anywhere from $5 million to $7 million on an annual basis based on the amount of work that's identified. I generally, what I'll do when I make this appropriation, kind of give you an idea of the number of projects that we do with our small sewer repair program. This past fiscal year, actually just up till the end of May, we've performed 470 small repair projects at an average of about $10,000, $10,200 per project, for a total of just under $5 million. So there's a lot of work that goes on with the small repair program. I'm not going to go into a whole lot of detail, but it's basically we have a listing of about 30 contractors, small minority contractors. We'll call 4 of them on a rotating basis to give us bids on these small projects. This supplements Brett's operations staff. They do some repair work, but it allows us to get those done quicker and that type of work. It's a very strong component of our diversity program because it allows for minority and women companies to get a start. In other words, smaller companies, and gives them the opportunity. And Shauna reports on those numbers in her semi-annual report for diversity, but I'll kind of reiterate some of those. Just this past fiscal year, for the first half of the year, the jobs that we bid for this particular contract, 35% of the small jobs, those 470 jobs I talked about, went to minority or women contractors. So it's a significant number. And the dollar amount that runs right with it, so about 36% of the dollars that we spend goes to minority and women contractors. So it's a nice program, part of the diversity program. And it also allows those contractors then to grow then to bid on our work. And we've got several of those contractors that are bidding those projects now larger than $50,000. Okay. The next item is MCO2 Watson to Edgar Road Sanitary Relief Project. This is listed as a reimbursement project, and I'll explain that here shortly. This appropriates funds and authorizes staff to enter into a developer reimbursement agreement with BCM Management Partners, LLC. Again, the ordinance authorizes us to enter into the developer agreement. The improvements consist of the construction of approximately 1,485 lineal feet of sanitary sewers, 8 to 36 inch in diameter. The purpose of this project is to reduce basement backups and relieve overcharged sanitary sewers. This project will provide for the elimination of one constructed SSO. The estimated cost of the improvements is $1,852,388. This agreement provides for the reimbursement of the sewer construction to BCM Management Partners. This appropriation is for a total of $2 million, which includes some contingencies. The agreement will allow for the acceleration. The district in its capital improvement plan for fiscal year 22 has a project, MCO2 Watson to Edgar Road, which is a much larger project. It's actually closer to 9,000 feet, almost 2 miles of sewer. And the lower portion of this project happens to be located right along Watson Road in the city of Shrewsbury. And there's a development of an old Rothman furniture store there going on. Well, their timeline is quicker than ours. We don't have quite all the easements for it. So they're asking, hey, can we build that portion for you when we do our construction? And then we don't have to go back and tear up what they did. And it becomes more efficient. So what we'll do is they'll build our portion of that project. And on the map that you see there, it identifies that 1,400 feet that they're going to build for us. It allows us to, to not impact the development and then at a future time. We recently, for the newer members, if you're familiar with the Brentwood area, the Brentwood Bound project, where there's a lot of work going on over there, we entered similar agreements over there with the city of Brentwood, where they agreed to build some of sewers that we had a future project. They're going to build them now as part of their project. Works out good. It's based on they have to bid the project, and then we review their bids and reimburse them then.
Are they required to meet our MBE, WBE set aside?
We do not require the MBE. We do require the prevailing wage in the agreement, though.
What percentage of our spending on these types of projects is contracted out to the developer?
I'd probably say there's probably only a couple a year out of the 70 or 80 that I'll bring you. It's typically only 2 or 3. So I would say it's probably less than 5%.
Sean is not here. So that's an analysis we did, was how often does this come up?
Right.
And we went through the process of trying to do that and decided it wasn't worth pursuing because of the success of the rest of the program. And it's such a small piece.
Okay.
Any questions? All right, one last item. It's the Shrewsbury Sanitary Relief Sewer and I&I Reduction Project. This action appropriates funds and authorizes staff to enter into a construction contract. The work to be done consists of the removal of inflow from 201 private properties. The purpose of the project is to reduce inflow and infiltration in Mackenzie Creek watershed, reduce billing backups, and relieve overcharged sanitary sewers. This particular project, the district received 5 bids on the project. The low bid was from Fred M. Luth & Sons Incorporated. The bid was below our design estimate, and our appropriation of $825,000 is below our budget of $980,000 for the project. Fred M. Luth is committed to 17% MBE African American participation on the project, and that meets the district's 17% goal for the project. This includes the engineering department agenda items on the agenda for now.
get a motion to be adjourned?
No, we've got, under other business there, I didn't know
Oh,
if you saw
sorry.
it. I apologize. Under other business, at the last program management meeting, Trustee Fair, who's absent today, had asked for an update on the Jefferson Barracks Tunnel project. And Alan Mueller, my assistant director in charge of our construction, has a little presentation for you to kind of give you an update on that.
Good morning, trustees.
Morning.
As Rich said at the last meeting, we were requested. Good, cool. Sorry about that. At the last meeting, we were requested to give an update of the Jefferson Barracks Tunnel. On slide 2, what you're looking at, that's on the screen right now. This is a slide some of the trustees we've used in the past and some of the trustees have seen and other ones obviously have not. So what I'd like to do is go over this slide, describe the overall construction project, the issue we encountered, and how we're moving forward. So we'll take a moment here and describe the project. The project consists of 3.3 miles of 7-foot diameter tunnel that was being constructed with an 11-foot tunnel boring machine. This tunnel averages 200 foot in depth, and it was designed to be a hard rock tunnel, which means it's supposed to be constructed in rock the entire length. After approximately 1.5 miles of constructing the tunnel, we hit a karst area, or a area of caves and silt and water and sand, 200 foot deep into the ground. At that point, we stopped, we met with design engineers, we met with the contractor, and we came up with some solutions and options which we brought to the board. The ultimate solution that was decided to move forward with consisted of construction of a recovery shaft upstream of the karst features that we encountered, and use a combination of surface grouting and grouting from the tunnel itself, the recovery tunnel, which is a method called spiling, which I'll get into later in the presentation, to excavate back to the 11-foot tunnel boring machine and through the karst feature. Also, we agreed to complete the remaining tunnel, which is approximately 2 miles of tunnel, using a 14-foot tunnel boring machine. And the reason we have gone with that size of tunnel boring machine is in case we were to hit another one of these features. 14-foot tunnel boring machine is the smallest tunnel boring machine capable of probing out ahead of itself and grouting through the head of the tunnel machine. So if another feature were encountered, we could repair it, work through it from the tunnel alignment itself instead of from the surface down, trying to work 200 foot into the ground. Next slide, please. This slide was just thrown in there to show you the overall construction site. This is the site for the intermediate recovery shaft. You can see on the right-hand side the crane sitting there, and it's actually the shaft itself is actually covered up there, but gives you a feel of some of the equipment being used. This equipment is on the surface, but it's also lowered into the tunnel itself, which we'll have other pictures of for you. Next slide. This is a little more detail on the recovery shaft itself and the hand mining that's being done. We have actually completed the recovery shaft. The shaft is 40 foot in diameter and 200 foot deep. We've also hand mined approximately 127 feet back towards the 11-foot TBM to the karst area. We probed out ahead of that to make sure we weren't getting into the karst area. Once we found the karst feature of caves, before we actually got into that, we created a concrete bulkhead. The bulkhead's actually 10 foot thick to prevent any of that material that I just spoke about from coming back on the tunneling contractors and MSD folks. We've used a system of spilings, and I'll get into details of the spiling in a future slide, but essentially the spiles are creating a steel and grout liner along our alignment of the tunnel that we can then hand excavate through. The spiling was actually completed the last week, or actually a week and a half ago. And we are currently chipping out the bulkhead. And this week, in earnest, we'll begin excavating through the karst feature. So the way we attacked this was two different methods. We did some surface probing and grouting, and we also did grouting from the tunnel. So in addition to the rescue tunnel, we grouted from the surface itself. Actually, on the left, where that picture is, that's where the TBM is actually first encountered the karst feature. You barely see that building on the left-hand side of the picture. That building is in St. Louis County Parks and was constructed in the late 1800s as an historic building, which is one of the reasons we couldn't put a shaft straight down at this location. On the right-hand side, that is the concrete bulkhead. This is where we, the next slide will show a little more of this, got into installing our spiling and grouting to make it safe to proceed forward once we got into the karst feature. And this is happening all at the same time, from the surface and from the underground in the tunnel. This slide, I would like to go into a little bit more of the what's called spiling. Spiling is really a 4-inch steel drill tube. The right-hand side of the picture, the green dots indicate where the spiles were placed. At the time we were putting this presentation together, they weren't all completed, so we had different colors, but now we're all completed. So these are drilled in approximately 80 foot. That gets us back to the 11-foot TBM. What this does then is once they're drilled in through the karst area, we hit rock, we hit nothing, we hit water, sand, silts, and then back into rock. What this does then is they're then filled with grout. At 100 PSI, there's valves, internal valves in there, they're activated, and it puts the grout on the outside of these 4-inch steel casing tubes. Doing this, we create a little bit of a shield around us to hand excavate through. As we're hand excavating through here, which actually started last week, chipping away the bulkhead itself, the plan then is to, and you can see the vertical lines through the 72-inch steel set on the top left portion. There's actually going to be structural steel placed in there every 3 feet, and there'll be wood lagging in between there. So to protect the workers, protect everybody as we're moving forward through these features. Couple pictures on the work itself. On the top left, you can see the machine that's drilling in the 4-inch spiles. Gives you a little perspective down there. On the right-hand picture, you can see this is the grout being lowered from the surface into the shaft, put in a pump, and pumping it to the head of the recovery tunnel, where we're pumping in the grout through the spiles. In addition to that, as we're working on that, we have mentioned the 14-foot TBM earlier. We've been working on refurbishing the 14-foot TBM. We have acquired, the contractor has acquired the 14-foot TBM. We're working on the cutter head fabrication. That's in Italy. Robin's facility is working on the overall tunnel boring machine itself, the trailing gears being retrofitted in Chile. And we anticipate the delivery date of all these different parts to be September of 2021 on site, and we'll start assembling it in the tunnel to start moving forward to complete the rest of the project. So this was being done as the field work was being done. And then the next slide, please. Oh, sorry, let me go through those pictures real quick. I apologize. On the left is called the main beam. Imagine this is, think of this as the skeleton of the tunnel boring machine itself. After a tunnel boring machine is used, any job, it's stripped down and retrofitted completely because The construction method is very hard on all the equipment down there, tunneling through solid rock. So it's stripped down, all the joints, all the bearings, everything is repackaged, redone. On the right is the main drive assembly motor. That's actually being tested. And that same thing happened with that. It's completely rebuilt essentially every time. And the last slide here is the schedule. We have completed the spiling installation. We actually started the excavation through the feature that we encountered. We anticipate that hand mining work to be done in late June and recovery of the original 11-foot TBM by late July, early August. September of 21, we anticipate beginning setup of the 14-foot tunnel boring machine. And then we'll have a slow launch and full mining of that machine by January of 22. Our anticipated completion is still August of 22 for the mining itself. And the overall project after the mining is done, we have to install the fiberglass pipe inside the entire length of the tunnel, grout the annular space, make connections to the drop shafts. So that type of work is anticipated to be finished and out of there by the fall of 23. Currently, we're on schedule and within budget of the amount that was approved by the board. Any questions?
I just want to say this is really, it's interesting. I no idea what goes on down there, so that's cool. It's engineering amazing.
I was down in the tunnel a couple weeks ago looking at this, and I told somebody, I was speaking to the workers down there, so this is personally, we do a lot of tunnels now,
Right.
but I haven't seen this exact process before. I said it was really cool, and I said, but I wish it was on somebody else's project, not ours.
Interesting was not the word you used, Alan, when we ran into this, I don't recall, so.
That is correct, sir.
Is there any other business?
No other business from engineering.
Motion to be adjourned?
So moved.
Second.
So you can either keep your program management things, or if you want to move them forward, we'll take those. We'll get the finance committee documents to you, and Trustee Wilson with the schedule, we'll be ready to start finance as soon as we get the documents changed out.
Welcome to the 267th meeting of the Finance Committee. Can I get a roll call, please?
All right, we'll note the trustees that are present.
Thank you. Can I get approval of the minutes of the, a motion for approval of the minutes of May the 4th?
So moved.
Seconded.
Thank you. All in favor of approval?
All right.
Aye.
Aye.
Minutes are approved. Let's move on. Tim, these are your items. Why don't you take over?
Yep, all right, thank you. Thank you, Trustee Wilson. So we have Peter Lemick and Mike Comstock from Aon. Aon's our pension consultant, retirement plan consultant. So they come in every quarter and do a review, kind of economic conditions, market conditions, and pension performance. So Peter and Mike, I'm going to turn this over to you for the presentation up on the board and in your packets.
Okay, great. Great, so this is Peter speaking. Hopefully everyone can hear me well. And if anyone has any questions during our presentation, please feel free to jump in and interject. So the title of our page here is Metropolitan St. Louis Sewer District Employees Pension Plan. So we'll provide an update through the first quarter of the pension. Then we'll also give you some more up-to-date numbers. So how the pension did over the month of April and through the end of May as well. And then we'll also provide you all an update with the two DC plans offered as well. So maybe flipping ahead just real quick to page 4, the title here are market trends in the first quarter of 2021. So 3 major market trends that we saw so far here in the first quarter. One being a sector rotation, so where we saw growth oriented stocks really leading the charge in equity returns over 2020, and really for the past couple of years, that started to rotate more towards more value-oriented stocks. So those energy and financials, those kind of down and out industries over the past couple of years have really been leading markets so far here in 2021. A major story has also been the rising yields that we've seen so far in 2021, coming off of historic lows really towards the end of 2020. We've seen yields, particularly in the longer end of the yield curve, some more 7, 10, 30-year type issuances increased pretty significantly here so far in 2021. And then finally, another stimulus bill coming in, continue to get major support from the U.S. government to help stimulate the economy over the COVID shutdowns that we saw in 2020 as the economy starts to reemerge from those shutdowns that we've seen here, really speeding up over the past couple of weeks or so. Page 5 just puts a little bit of visuals to some of those major themes that I just discussed on the page before. Maybe on the top right here, what we're looking at is U.S. Treasury yields. In red, those are going to be 10-year yields, and in that light blue are 2-year yields. So you can see since the end of 2020, the divergence that we've seen here. So short duration yields continue to be at historic lows, with the Federal Reserve continuing to pin rates at about 0% on the short end of the curve. However, the curve has steepened quite significantly, with longer duration issuances really increasing over that time period. And what that means for your fixed income holdings is during periods where we see yields rise, the assets that you all hold or investors hold tend to depreciate over that time period. However, once dividends and interest is received on those issuances and new money is put to work within the fixed income market, those managers are putting money into securities that are now yielding at a higher yield going forward. So there can be some short-term pain from a depreciation basis for assets, but on a go-forward basis, some more healthy yields coming from those longer duration issuances on the yield curve. And then maybe on the bottom left of this chart here, you can see the divergence that I spoke to between value and growth. Since the beginning of the year, we've seen value, like I said, really starting to lead the charge in public equity returns, whereas growth is really driving returns over the calendar year 2020. Page 6 here, there's a lot of numbers here, so I won't touch on all of them, but maybe just to point to a couple. What you're looking at are major broad market returns through the end of the first quarter of 2021. So that 12-month period is really including the very strong upswing we saw after the significant sell-off in the first quarter of 2020. So that 30% sell-off that we saw in the first quarter of 2020 is not being included in that one-year number. However, the very strong markets over the following 12-month period is included. And you can see here global stocks up almost 58% over that trailing 1-year period. U.S. large cap stocks up about 61%. Small cap stocks have really been leading the charge, particularly over the first quarter of 2021 and late 2020, outperforming their large cap counterparts, up almost 95% over that trailing 12-month period. So what this means for the pension is assets, particularly equities, had a really strong year over this past 12-month period. And even with rising rates that I mentioned in the first quarter of 2021, you can see towards the bottom of this page, 3 rows up, U.S. investment grade bonds down about 3.5% over the quarter. But still over that trailing 1-year period have been resilient, up about 0.7%, trailing 3-year period returns, almost a 5% annualized return. So still remaining steady over that 12-month period. Are there any questions on the broad market environment before looking ahead to the planned performance?
Doesn't look like there are.
Okay. So flipping ahead to page 8, what we're looking at here is just the total pension plan returns through the first quarter of 2021. And as I noted before, very strong 1-year return, up almost 32% over that time period versus the policy benchmark return of 30.8%, and really strong annualized numbers over the 3-5-year period. Over both those periods, that's an average annualized return of over the 5-year period, 8.3% over that time period. So on an assets basis, very strong absolute returns over the trailing 5-year period or so through the first quarter here of 2021. On page 9, this is just giving you a visual on how assets have grown since January of 2000. Over that time period, assets increasing pretty steadily, despite some blips that we've seen, during the global financial crisis, and more recently here with the COVID shutdowns. Over the first quarter, we saw about $5.5 million in investment earnings from the assets, coupled with about $5 million of withdrawals from the pension. Then over the trailing 1-year period, about $74 million in increased assets over the pension, really being driven by those equity markets I spoke to, returning 60+% in some cases. So continuing to be within policy and using monthly benefit payments to continue to rebalance the pension to the policy target weights has been very beneficial and kept the pension in the market and been beneficiaries of this bull run that we've seen really over the past 12, 13 months now. Page 10, just to let you know that the asset allocation for the pension is all within the allowable policy targets through the end of the first quarter of 2021, as laid out in the investment policy statement. Page 11, maybe just a couple.
So on 10, for total domestic equity, it looks like we're at 38.3%, which is above the policy target. Is that just due to the growth in stocks recently that it actually came out of the policy benchmark?
It is. The growth in equities that we've seen has really been driven to that increase to the overweight as of this time period. Just as a reminder for you all, for monthly benefit payments, John and Tim will come to us for a recommendation on where to source those funds from on a monthly basis. And we'll take a look at the most recent available market values. So usually as of the previous day, and where to source those funds. And in the case of recently, we've been taking a lot out of domestic equities just to bring that back, that overweight back towards target. And even with, about 1.8 million in monthly withdrawals coming out from equities really over the past couple of months, those strong equity markets continue to be the driver of why there's a slight overweight compared to the policy target. However, as I mentioned, still well within the allowable policy ranges.
And yeah, that was a good point to make, Trustee Evans. So, and Peter mentioned that we do then, when we fund the monthly benefit, we'll take from wherever we're over policy. And then we also twice a year make our contributions to the plan, and we've just made our contribution in the last couple of weeks, and so that's another way that we kind of rebalance here. So when we made that contribution, we put it in some of the other assets that we had that'll bring that percentage weighting then down for the equities as well, to try to keep things more in balance too.
Thanks.
All right, sorry, Peter, go ahead.
No problem. Just a couple of comments on the numbers you see here on page 11. Just a couple of comments on the manager performance. As you know, I noted before, very strong returns coming from equities. Total large cap equity, you can see up about 60.5% over that trailing 1 year period. Small cap equities, those are you all utilize active management within this space, up about 82% over that time period. So smaller cap equities really performing well versus their large cap counterparts over that trailing 1 year period. And then within international equities, about a 47% return over the trailing 12-month period. On page 12, within fixed income, as I mentioned, with those yields rising, a bit more headwinds for fixed income managers in that rising rate environment over the trailing 1 year period. Your managers have navigated the environment very well, returning nearly 9% over that trailing 12-month period. Within the fixed income portfolio, income research up about 4% over the trailing 12 months. Prudential Core Plus bonds had a more challenged quarter over the first quarter. However, still very strong trailing period returns, including the 7.3% return over the trailing 1 year period, up nearly 7 percentage points versus the benchmark over that time period. And then just a reminder to the committee too, both within the hedge fund and the real estate fund, both of these managers are within the process of full liquidation. Trust, it's really a residual value that's kind of taking its time going through courts with a dispute on an underlying investment there. And then UBS Trumbull Property Fund is continuing to pull down and distribute money back to you all on a quarterly basis, and we expect that to continue to be pulled down for the next several quarters. And finally, and bullets here on the bottom, just an update in green on the pension assets through April, a 3% return in the month of April compared to the policy benchmark return of 2.2%, and then additional 0.3% estimated return through month to date through May 25th. So that brings through May 25th an estimated year-to-date return of about 5% for the pension. Let me pause again and see.
Hey, we had a question, Peter. Hold on a second, please.
Yeah, what's the assumed rate of return on the pension fund annually?
It's 6.7.
The assumed rate of return is 6.75.
Right, thanks.
You okay to go?
Yes. All right, you can go ahead, Peter.
Okay. Just real quickly, an update on the DC plans on page 13. What we're looking at.
Just DC is defined contribution. Do you guys got, okay. I know we use a lot of acronyms.
Yep, very.
Go ahead.
Yep, that's a defined contribution and the deferred compensation plan. So the combined assets here on the bottom of the page, about $115 million in overall assets. And again, as you might expect, that's a pretty large increase compared to 12 months ago. About a $35 million increase in overall combined assets for the DC plan participants. Both of these plans offer identical fund lineups for their respective participants. You can see here on page 14, what we're looking at here are the tier 1 assets for offer to the plans. These are your quote unquote set it and forget it options for participants. So those participants who simply want to put money away into the retirement savings and not have to think about it during their working years, this is a very, very good option for them. So if you think about your worker starting at age 25, and putting assets into their retirement portfolio, these funds will automatically place them on a glide path with an assumed retirement age of 65, and over the course of their working career will invest their assets along a glide path. So going from more risky or return-seeking type investment strategies, some more equity allocation for the most part in their younger working years, and shifting that to more conservative income-oriented type strategies as they approach their retirement age. On page 15, your tier 2 assets, what these are the investable public market space for participants that are offered to them at a very low cost. So those participants who really want to gain exposure but don't want to pay active management fees for those exposures and think and would prefer just a low cost exposure to the global economy for the most part. You offer that to your participants in this space. So when you see the Vanguard Midcap Index Fund return 7.2% over the quarter, and the benchmark return 7.2% over the quarter, that's in line with what we'd expect. We would expect these funds to track their benchmark. So a 3.6 or negative 3.6% return in the total bond market fund is in line with a negative 3.6% return of its appropriate benchmark over that time period. And then within your tier 3 portion of the available funds to participants, these are where they are able to act as active managers within the space. So Vanguard Windsor, Vanguard US Growth, and Vanguard International Growth are all active managers. And you can see over the trailing 1-year period, these managers have performed quite well versus the respective benchmarks. Vanguard International Growth in particular up about 87% over the trailing 12-month period versus a 50% return for the benchmark. So your active, the active funds offered here have over the trailing time periods returned quite well on both an absolute and a relative basis versus their respective benchmarks. Let me pause again to see if there's any additional questions.
I don't see any right now, Peter.
Okay, so maybe just a couple of last comments before wrapping this up. On page 16 and 17, for your reference, what we are looking at here are the investment management fees. On page 16 is for the pension fund managers, and page 17 are for the DC plan fund managers. How those expense ratios or how those investment management fees compare to institutional peer medians. So if other similar institutions were investing in this space, what would be the expected investment management fee in this space? And for both the pension and the DC plans overall have overall lower costs for the investment managers utilized across the 3 plans. So again, I'll pause there to see if there's any questions. That was that's what we had for our prepared remarks today.
Any questions from any trustees? Okay, Peter, thank you, and Mike for standing by there as well for everything today. If we do have any questions, I'll make sure we circle back with you and get answers to the board, but thank you for your review.
Sounds good. Thank you all for your time. Have a nice day.
All right.
Thank you.
You too. Bye-bye. And then over the next couple of months, we'll have a few more pension topics we're going to talk about. We're reviewing a draft of the actuarial report as well as some other reports the actuary put together, so they'll come in to explain those. So look forward to that. And we'll have a couple of probably other updates throughout the summer too on the plan, just to help a lot of you get familiar with what we're doing for the benefit of the employees as well, since you haven't seen a lot of this here before. Okay, if there's no questions on the pension review, I'm going to move to the next item, which is the portfolio update. That's the sheet that we look at every month. It was pointed out to me last month that in my haste to get through this, I was messing up left and right, so I am going to try to get that correct this time. So we'll start in the upper left with the summary statistics. Par amount of portfolio is about 648 million, roughly where it was last month, so in and outflows have been about the same. Where we have seen a little bit of an increase, well, actually, this is pretty flat as well, but our yield to maturity has gone up just a couple of basis points as we started to extend out the curve a little bit. We've been staying very short, but we started to go out the curve a little bit to pick up some more yield. And the weighted average maturity, which is that WAM, is up pretty significantly versus last month because we've put some investments out 1 or 2 years. And that's back almost to a year, which is still well below the benchmark, which only invests a 1 to 3 year treasury. Since we need to use that money, a lot of it before that 1 to 3 year period, we tend to invest shorter. Yield to maturity is higher than the benchmark because the benchmark turns over every month, and interest rates, as Peter just talked about, the yields on bonds are very, very low. As yields start to go up, especially short term, we'll see the benchmark move up more quickly than our portfolio since we don't turn over our whole portfolio every month. Or the sector allocation in the upper right, this is really probably the most important square we look at here, and this is just comparison of our portfolio to the policy limits, and we are within policy on all the investments. As you can see, we invest only in the highest rated securities out there. That's by policy. And so by design, but U.S. Treasury bonds, federal agency bonds, notes the commercial paper we invest in is short and of some of the highest rating. That's where we can pick up a little bit of yield. We had been avoiding commercial paper, so we're starting to dip our toe back in there a little bit. Just risk during the pandemic, we had a lot of uncertainty. Fund summary in the bottom left just shows you generally where our funds are held. So we still have a little bit of debt reserve fund. Those are for the benefit of our bondholders, security. We have about 100 million still in debt project funds. Those are bond proceeds that we have received that are going to be spent probably over the next year or less on projects. The operations fund is kind of a catch-all for a lot of different reserves, some of the cash that we've gotten put toward projects as well. And then SRF operating fund is some money that is set aside for our SRF bonds from the state revolving fund. SRF is state revolving fund. So that's MD&R loans that we pay back regularly and borrow from as well. Maturity distribution just compares our maturity, this is in the bottom right, to the benchmark maturity. So as I said before, those red bars, the benchmark maturity invests only in 1 to 3 year treasuries. We tend to have a good chunk of our portfolio invested shorter term because we do use that money to pay for projects and that sort of thing on an ongoing basis. So any questions about the portfolio review? All right, then I am going to move to the final topic, and that is management audit. So our charter requires that we do an independent management audit every 5 years. This is section 7.060 of the charter. Doesn't tell us what a management audit is or how to do it. It just says that we have to do one. There's, we have to use a nationally recognized management consulting firm. So what we tend to do is an RFP, and we've done some different things over the years. We've done some self-evaluation, some benchmarking type things. I am recommending, I like this kind of framework, I'm recommending that we use what is called the COSO, or Council of Sponsoring Organizations framework for internal control. There's actually 5 components to this. One of them is control activities that we wouldn't make part of this audit because we do a robust internal audit regularly, so they look at specific tasks regularly. What the rest of the framework looks at is really the control environment for the entire organization. So it'll look at organization structure, it'll look at ethics, it will look at that policies are in place. It'll look a lot at human resource type policies and practices. So what it's looking at is the overall control of the organization, and if the right pieces are in place for things like fraud deterrence, risk assessment, ongoing monitoring and communication, and it'll make recommendations based on what the analysis finds. We did something similar to this 5 years ago, and we came out with some good recommendations that we have, and most of them are implemented. And so the result here, or the goal here, is to get a final report that'll go to the board. It'll also be available to the public. To one, give hopefully confidence that the organization is structured well and doing what it's supposed to do, but also to point out areas where we can improve and do better. So I think we got a lot out of the last management audit we did. We're required by charter to use a different firm, so a new set of eyes. So there'll be some differences just because we'll have a different organization looking at it. But that is my recommendation. So if there's no concerns with that, the plan will be to RFP that in the coming months and then start the audit later this year. What you can expect as trustees is probably some communication with the auditors. They'll probably reach out via phone or email. They may want to schedule time to interview you as well, just to talk to you about what you're seeing here, get your thoughts on the district. This isn't an audit of any specific management personnel, but more organizationally looking at kind of the whole picture. Are there any questions about that or what it might look like? Okay. All right. I will keep you updated as we go through the RFP. I'll come back to you and kind of present.
I'm sorry, Tim. Will we see the RFP before it goes out?
You can see the RFP, sure. Yep, I'll send it to you. We've got a scope kind of drafted, so I'm going to refine it, and then before I send it over to purchasing to send out, I'll send it to the trustees for any comments or input.
Thank you.
Sure. Okay, Trustee Wilson, I have no other business for the Finance Committee meeting.
Okay, thank you, Tim. Our next meeting is scheduled for the 29th of June. If there are no comments for the good of all, I'll entertain a motion for adjournment.
So moved.
Second.
Okay. All in favor?
Aye.
Hearing no objections, the meeting is adjourned.
I never want these to end either.
Trustee Wilson will switch the documents out, and we're on schedule to start whenever you're ready.
Okay. Okay, thank you. Again, welcome to the Stakeholder Relations Committee meeting. Can I get a roll call, please?
We will note the trustees that are present.
Okay, thank you. There are no comments by the chair. I'd like to get a motion for approval of the committee meeting minutes of May 4th.
So moved. Second.
Okay. All in favor of approval?
Aye.
Opposed? Hearing none, minutes are approved. The next two items of the item 4 and 5 of the will be discussions led by Ms. Meyer, and I'll hand it over to her for.
Thank you, and good morning, everyone.
Good morning.
The first item is proposed resolution number 3675. It authorizes the renewal of a contract with Cardinal Point Partners, LLC, for federal legislative services. This would be the renewal of the second of 4-year options. So What that means is we entered into a contract with Cardinal Point Partners in July of 2019. It was a one-year contract with 4 one-year additional renewal options. So this would be the second of those 4 renewal options. Any questions on that? Okay, so number 5 on the agenda is also mine, as Trustee Wilson said. And it is 4 proposed resolutions, and I'll give you a little bit of background. So the legal department, I have 2, 4, 5 attorneys plus myself, and then we have 4 outside law firms that help us with kind of general legal services is how we refer to them. Those 4 firms, the way we're set up with them is 2 of them are large full-service firms. That'll be Armstrong, Teasdale, and Thompson Coburn. And then we have a smaller defense firm, kind of mid-size, I should say, which is Reinierson, Sue, Schnurbush, and Champion. And then we have a small minority woman-owned firm, which is Dorothy White Coleman and Associates. So the first proposed resolution is number 3676, and it authorizes the renewal of a contract with Armstrong Teasdale LLP for legal services for the second of 4-year options. So again, just as the federal legislative services, this contract was entered into in June of 2019. It's a 1-year contract with 4 renewal options, and this is the second of those renewal options. Any questions on Armstrong?
So what, there's no estimated cost for the?
No, we pay them on an hourly basis as they work, and so as part of the contract, they submit what the hourly rates are going to be for the life of that contract. So I have those with me if you're interested.
I'm just curious, I mean, is this above or below, or what was our expense last year? And what would you anticipate it to be this year?
So as part of my legal budget that is part of the budget every year that we just went through, I have a line item referred to as professional services that covers these general legal services plus other types of services, you know, that come through my department. So the budget last year, in FY20 was actually, the actual budget was 2.9 million. That was just for professional services. I estimated forecasted for FY21 to be 1 million. We had, well, it's gone down quite a bit because over the last 2 or 3 years prior to FY21, we had a large construction litigation case going on, which increased the legal services budget quite a bit. But that's been since then concluded.
And then how do you determine which firm to use?
Well, so like the large service, the full service firms, it's just what area we actually work with them with. So Armstrong, Teasdale, and Thompson Coburn, they can cover, you know, anything basically. But how it's worked out in the past is we mainly use Armstrong Teasdale for employment issues, and that's just how we used to use both Thompson Coburn and Armstrong Teasdale, and it just kind of has to do with who we work with there, you know, like our primary contact. So we've started using Armstrong Teasdale a little more for employment. We've used Thompson Coburn more for property issues, condemnations, and that sort of thing. So it just depends on the individual issues that come in as to who I assign them to.
And then litigation goes to Snurbush, and
A lot of the, like property damage, general litigation, will go to Reimbursement.
right.
And then and the same thing with Dorothy White Coleman. You know, we have a slip and fall cases, personal injury, property damage, that sort of thing that aren't necessarily real large cases. And I typically go to Reimbursement or Dorothy White Coleman with those.
Okay.
So.
And what are the hourly rates for each of the firms?
Okay, so the hourly rates for Armstrong Teasdale, these are, for the first 2 years, they were fixed. And then each of the years 3 through 5, they'll go up 3% each year. But starting in year 1, they range from $400 an hour for a senior partner to $250 an hour for associate. Thompson Coburn, these rates are fixed through the life of the contract, so that's through 2024. And those rates range from $360 an hour for a partner to $290 for associate. Reimbursement is insurance defense firm, so their rates are quite lower than the other two, but they're also fixed for the life of the contract, and they range from $175 for a partner to $160 an hour for the associate. And Dorothy White Coleman's rates will be fixed through year 2, and then the third year, they will increase $10 an hour for each of the positions, but they range from $310 an hour for a partner to $275 for an associate. Okay, any more questions on Armstrong? Okay, so the next proposed resolution is number 3677. And this resolution will authorize the renewal of the contract with Reimbursement, Sue Schnurbush, and Champion for legal services for the second of 4-year options. The next proposed resolution is number 3678. And it will authorize the renewal of the contract with Thompson Coburn LLP for legal services for the second of 4 option years. And then the last one is proposed resolution 3679, which authorizes the renewal of the contract with White, Coleman, and Associates for the first of 3 option years. So what had happened is when we went out with the original RFP for legal services, which was back in 2019, our MBE firm was Larry Hale. Larry Hale passed away about a year and a half ago. So over the summer or early spring, no, it was, we started her in January. Late last fall, I looked around for another MBE firm to fill the position we used Larry for, and Dorothy White Coleman was the one we decided on, brought her contract to the board, but it was a 6-month contract with then 3 one-year option years. So I could get, if she worked out, if we decided after that 6 months we wanted to stay with Dorothy's firm, then I could get her in line with the renewal of the other general legal services contract. So that's what's going on here. We've had her under contract for 6 months, and this resolution is requesting authorization for the first of 3 option years. Any questions on any of those? Okay, thank you.
Thank you. We'll move on to Ms. Coleman. She has a presentation. Not Ms. Coleman, but
I'm Miss Farrington. I'm just filling in for Tracy Coleman this morning. Thank you, trustee. Good morning, trustees.
Morning.
I have resolution number 3674 for insurance brokerage and consulting services, providing insurance brokerage and insurance consulting services to the district with Charles L. Crane Agency for contractual services for a general insurance fund for fiscal year 2022 in the amount of $70,000. This contract provides insurance consulting and broker services for the district. This resolution will exercise the district's third year and authorizes the district to enter into a contract with Charles L. Crane Agency for 1 year. The original contract was for 1 year with 4 option years. The district will enter into a contract with Charles L. Crane Agency from September 1st, 2021 through August 31st, 2022. Are there any questions? Thank you for your time.
If that's all of the public business on the agenda today, I'd ask that we clear the room to move into closed session.
You will need to take a vote in public to go into closed session.
I'm
You
sorry.
will need to do that.
I'll entertain a motion to move into closed session.
So move.
And just for purposes of the sunshine law, it's got to be a little bit formal, so this is a motion. Go into closed session, discuss legal, confidential, or privileged matters under 610.021 1 of the revised statutes. We've heard a motion and a second, so we're going to take a roll call vote, and this is for your protection here. Trustee Watson?
Yes.
Trustee Wabi?
Aye.
Trustee Nicholasison?
Yes.
Trustee Wilson?
Yes.
Trustee Evans?
Yes.
All right, we're in closed session.
Good.
Okay, I'll entertain a motion to come out of closed session.
So move.
All in favor?
Aye.
We were back in open session.
We're in open session. You have a couple of things before unfinished business. Nothing?
We're good.
Anyone have anything for the good of the body? Not, I'll entertain a motion for adjournment.
So move.
Second it.
Okay, thank you.
Thank you, everyone.
Thank you all.
And
Thank you, everyone.
meeting is adjourned.